Hello guys, it's stock trader Max here from Daily Market Movements and welcome to another video. Today I thought I would put my neck on the line and upload a video prior to the big meeting today. If you don't know what the big meeting is, then you must be living under a rock because today is the FOMC interest rate decision. We're going to hear from Jerome Powell and the rest of the Fed committee with regards to their interest rate decision. Are they going to cut 0.25 basis points? Are they going to cut 0.50 basis points? And then of course we're going to hear from Jerome Powell in the press conference 30 minutes later. So lots going on today. Obviously it's going to influence the markets massively. It's been the debate that's stolen the headlines for the past 7 days is the Fed going to cut by a quarter or half a basis point? And I have just put out a post here on X where I basically call out bullshit. Because at present, there is a 63% chance, this is over on the CME polling, but there's a 63% chance of a 50 basis point cut versus a 37% chance of a 25 basis point cut. And I, as my X post probably suggests to you all, I'm in the camp of 0.25 basis points. I don't think we're going to get a 0.50 basis point cut. And I do explain why. You can go and follow me over on Stock Trader Max and read this post. But I think what is important to understand is that if we do get a 0.25 basis point cut, this is a post by Ryan Detrick that I really liked. Here is the S&P 500 since 1980, and it shows basically when the Fed has cut, when the markets have been at an all-time high. So when a new cutting cycle has commenced, when the markets have been at an all-time high. And as you can see from this graph here, 1 month return after the first cut, there is 45% of the 20 times the markets have been positive. And then obviously 3 months later, 15 of the 20 times the markets were positive, so a 75% chance. And then of course the 6 months return was still 15 out of 20, so 75%. But what's the most important statistic here is the 12-month return after the first cut. And all 20 out of 20 occasions, the market was higher 100% of the time. And I think that really puts it into perspective. It doesn't really matter whether we're going to get a 0.25 basis point cut today or a 0.50 basis point cut. What does matter is these statistics here. But historically speaking, 20 of the 20 times when the Fed has started a new cutting cycle, when the stock market is at an all-time high, the market has been higher 20 out of 20 times 12 months later. And of course, 75% 3 and 6 months later. So these are pretty good statistics to note down going forward. But before we jump over and have a look at the chart, guys, don't forget, anyone who's wanting to join my Signal team and receive my macro research on a daily basis, this is all provided to you via Telegram group chat, then you can sign up to my Signal service, dailymarketmovements.com. I've left the website link in the description of today's video, but dailymarketmovements.com, and you can join for a very small fee of $29 a month. But let's get started here with the S&P 500. We are trading towards the upper end of this wedge. If we just quickly jump into the 1 hour chart, I feel like we have peaked here. And the reason I say that going into the Fed meeting, I am expecting a sell on the news event, whether it's 0.25 basis points or 0.50 basis points. I do believe that the market will sell off and we will end today in the red. And the reason I say this is because here we have an Elliott wave that looks to me that has played out, which looks something like this: 3, 4, and 5. We're around that 5 inning, or that towards the end of this fifth wave at present. And I do believe that what's to come next is a minor ABC correction where, maybe we fall down towards, let's say, 5,580-ish. Maybe we go and test the bottom of this wedge pattern at around 5,500. I'm not too entirely sure, but I am expecting a minor pullback during today's trading session and maybe the next couple of days as well. And I do believe that's going to offer a good buying opportunity for investors that have missed out on this recent September rally that we've seen from the 6th of September all the way up until present. So if you have missed out on that rally, don't worry. I do believe you'll get one more opportunity to buy ahead of a breakout as we go into the end of the year. And I think that's what's really important to understand, guys, is that if we do dip today, I do see it as being a fantastic opportunity to be a buyer of this dip as we move into the end of the year. Because I think as we go into the elections, and especially post-election, once the market has more certainty of who is going to be the leader of the US for the next 4 years, I do believe that is going to result in some bullish sentiment in the market, which will take us higher all the way into the end of the year and, of course, going into Q1 2025. Let's just have a quick look at the NASDAQ 100. NASDAQ 100 also pushing up against the top of this wedge pattern. Like I said, one really important price for me for the Nasdaq 100 to break above, for me to start getting real bullish, is the swing highs that we formed back on the 22nd of August, which is around let's say 20,000. So if we could break above this line here, that would be very, very encouraging here, that we could then go up towards the all-time highs, which sit a few thousand points higher at around 20,800. Looking at the Dow Jones 30, this is leading by example at the moment in time, 41,650, currently trading at a brand new all-time high here for the Dow Jones 30. And I do expect this to continue, but very similar to the S&P 500 and the Nasdaq, we could see some short-term pain before we do eventually see that gain as we go into the end of year. Finally, guys, if we just look at Bitcoin, this is one of my favorite setups in the market at present. Historically speaking, Bitcoin performs exceptionally well post-halving and post-US election. So I'm pretty much expecting the new bull cycle to start from October, so next month in 2 weeks' time, all the way through until November 2025. And the reason I say this, if I just bring up the all-time chart here for the Bitcoin prices, this was 2012. There was a US election and halving event around this area here. And what happened? We had this massive bull run that took place all the way until November 2013. And then fast forward 4 years, at the back end of 2016, what happened? We had the halving event. We also had the US election. And then, as you can see, for the next 12 months, we had this really big rally all the way up until November 2017. And then, of course, same again, fast forward to 2020, October time, we had a nice rally that ultimately peaked in November 2021. So that's what I'm kind of looking to happen again here, to have a nice surge for the next 13 months in Bitcoin prices, which of course is going to help our Bitcoin proxies that I myself and my Signal team all hold over in the daily market movement Signal team. But yeah, just to wrap it up, guys, to conclude today's video, I am expecting a 0.25 basis point cut. I don't think the Fed's going to go at 0.5, and I'm looking for a sell on the news scenario that will play out, but ultimately it's going to provide a dip that I think investors come in and buy. There's a record amount of money, roughly $6.5 trillion sat in market funds that is ready to be invested, and I think that this dip will be bought and we will see a substantial rally into the end of the year. So if we do dip today, I would be a buyer.